Monetary Policy Committee, I beg your pardon, has now decided to raise the repo rate by 25 basis points. That takes us to 4.25%. In just the last few moments, the governor was talking about how even in those deliberations around the rates increase today, there had been some feeling among members that perhaps we should have gone even as high as 50 basis points. Let's talk more then about this rates announcement. We're joined this afternoon by economist Patrick Buthelezi, who's with Sanlam Investments. Patrick, a very good afternoon to you. Thank you so much for your time. Let's pick up on that very point, the debate about whether to go for 25 or 50 basis points. Have we been given the best option, the best shot here as ordinary South Africans?
Yeah, thank you very much for having me. Yeah, I think the debate is now shifting very significantly, and we see this debate also globally. The U.S. recently also indicated that they will be prepared to raise rates even more aggressively. So it is clear from the statement that some of the MPC members are concerned about inflation expectations and moving out of hand. We have seen inflation getting revised aggressively higher from 4.9% previously in like January meeting. So they were expecting inflation to average about 4.9%, and they've revised it higher to about 5.8%, and this is higher than the 4.5% midpoint they would like to see inflation settling at. So clearly there are concerns about inflation, but at the same time you also have the economy that has not yet fully recovered. So that is why you also have these three other members preferring to hike very gradually so that you continue to support economic recovery at this stage.
How much then does this rates announcement and the previous one help in steering us towards that direction?
Yeah, I think for now we are still moving towards a policy normalization, because when the economy, when we had the pandemic, what they did, they reduced interest rates aggressively, and even now interest rates remains negative. So what it means is interest rates are still highly accommodative. So we are moving into a stage where monetary policy support is becoming less accommodative as we see inflation moving higher and higher, and in some parts of the world getting out of hand. So the concerns is really about inflation expectations, because if you anchor inflation expectations, then you will be able to maintain lower interest rates for longer. But for now, the SARB is concerned that inflation, like for instance, if you look at inflation expectations by the market, it rose to about 5.5%, which is higher than 4.5%. He has been making this point for a number of times, the governor, that they want to keep expectations well anchored towards that 4.5%. So the move towards normalization, and is also in line with what we see in other countries in Africa, in the southern parts of America, also seeing this normalization taking place, which is also showing confidence that economies are recovering from the pandemic, because the pandemic did a huge damage. We saw most economies, including South Africa, declining very sharply because of the pandemic. But now, because of this support, now you have inflation shock. And now what is also happening, because of the conflict in Russia, we're seeing food prices spiking. We've seen wheat prices increasing aggressively, and also maize prices have increased aggressively, because both Russia and Ukraine are major exporters of this grain prices, and also oil prices have increased, so which is raising concerns about future inflation. That is why also the governor emphasized the point that still in terms of risks, the risks are still biased to the upside, even though they've upgraded.
Just on that then, Patrick, let's pause for a moment and talk about how a a 25 basis point increase in the repo rate, what's that likely to look like then on the statements of South Africans? How's it going to change things?
So the increase of about 25 basis points, what it does is it raises the cost of borrowing. So for people who have debt, so the cost of servicing that debt will increase. But 25 basis points increase is not that significant because I mean interest rates where they are currently, they are still negative. So they would like to see interest rate becoming less negative or even moving into positive territory at some stage in a neutral a kind of level. So the neutral kind of level is where interest rate is neither creating inflation or decreasing economic growth. So for now, we are moving from that highly accommodative stage, of which if you're looking at the projections for the repo rate, so it is clear that we can expect interest rate to continue to increase because the model produces, I think, the repo rate is just above 5%, which indicates that we can expect interest rate to continue to increase in the months ahead.
So with that in mind then, more rate increases, you're saying, are likely down the line. 25 basis points increase announced today. You pair that with the recent fuel price increase, a surge really in the price of fuel per litre, also influenced by the Russian invasion of Ukraine. You pair that with the upcoming increase with electricity tariffs by Eskom. That kicks in April, if memory serves. Is this the time for South Africans to start cutting down? And if we do cut down, where should we begin?
Yeah, unfortunately, this is a very difficult situation, and I think it is also difficult for the Reserve Bank because they have a mandate, and their mandate is to keep inflation well contained. So the tool they have to do that is to raise interest rates, and for South Africans, it's getting tougher because the cost of living, I mean, you can see food prices increasing, as you indicated, that electricity prices have also increased in double digits already. So you're seeing all these cost pressures coming together to press South Africans. And that is why I think for me, in terms of economic growth, I was surprised that they raised economic growth to about 2%, given what is happening globally and the fact that they are raising interest rates. And I was also surprised in terms of their assessment of risks as far as economic growth is concerned, because they said it's balanced. In our view, we believe that the risk to that 2% is very skewed to the downside because they are raising rates, which will have a negative impact on the consumer, including investments and many other things. So we believe that 2% is optimistic at this stage. We believe that the economy will grow at a lower pace than that.
And that 2% is revised upwards from 1.7% in the last briefing in January. I just want to talk about the external factors, again, related to the Russia invasion of Ukraine, right? Russia, major oil producer, massive in the energy sector. Europe is concerned about what to do with that as far as sanctions are concerned. So if sanctions were to be imposed on Russia's energy industry, how much more pressure would that pile on the rest of us globally?
Yeah, in fact, we are seeing some of that already coming through. If you're looking at where oil price is, because Russia is also one of the biggest player in terms of energy export around the world. So, I mean, if this pressure continues, then higher oil price, we can expect higher oil price to remain for some time. And if that is the case, remember, a lot of things have to be transported. Labor, when we go to work, we use transportation. Goods are transported. Everything, factors of production, when they meet, transportation is core. So if oil price remains at these elevated levels for longer, then unfortunately inflation will be even higher than what is currently feared. And if inflation is higher, it's going to be very tricky, because you're going to have higher inflation, but at the same time you also have a lower economic growth, which is difficult for central banks to respond, because on the one hand you want to support your economy, you want to see your economy recover, but on the other hand you also have inflation that is getting out of hand. And if you're not doing anything about inflation, your risk expectations getting out of control. So yeah, it's a difficult, a very difficult situation. So that is why something one needs to monitor very closely how central banks just generally around the world respond, especially major central banks. Like if you look at the FOMC, the US, you're looking at the likes of UK, and then also other central banks.
Patrick Buthelezi, economist with Sanlam Investments, thankful for your time. Good to speak to you, sir. Thank you.